The primary topic of this video will be how the big beautiful bill passed by Congress and signed into law by President Trump will impact my tax obligations, and the answer is a $400 to $500 savings, mostly tied to the Social Security deduction. I am not basing that discussion on reading the tax law, which I would never do, but on a few articles that I have read that summarize the changes which are applicable to me. I do not benefit, for example, from the increased SALT deduction since I take the standard deduction, having almost no itemized deductions at all, other than about a $2,300 property tax payment paid annually on my home, which Zillow values at over $900,000. I live in a state, Tennessee, which does not have a state income tax. Before addressing that primary topic, I would note that Trump said he would be sending out threats to 12 nations on Monday that contain take it or leave it U.S. offers on tariffs. If those countries do not accept Trump's terms, he will levy up to 70% tariffs on their exports to the United States starting on August 1st, 2025. As I mentioned in my last video and a comment left today in my last blog post, investors currently assigned a 100% chance that Trump will not follow through with these kind of retaliatory threats based on current stock market levels. So a question to ask yourself is that whether you're comfortable or not that the odds are at 100% that he will not follow through. As to the BBB tax changes that impact me, for seniors paying taxes on Social Security benefits, and I have included 85% of my Social Security benefits as taxable income since I started to collect them, $6,000 can be added to the standard deduction, which indicates to me that this is above the line deduction for seniors with adjusted gross income of up to $75,000 for single filers and up to $150,000 for couples filing jointly. Adjusted gross income is found on line 11 of the 1099. The deduction is phased out above those thresholds and eliminated altogether for a single filer with an AGI above $175,000 and $250,000 for joint returns. That deduction expires on December 31st, 2028. So the Republicans want to make that a campaign issue in the 2028 election. An estimated 68% of seniors do not pay any tax on Social Security benefits, and that comes from the Trump administration estimates under current law. So this change is irrelevant to them. This new deduction will add more seniors to the no tax owed category and reduce the amount owed in taxes for others, which would include me, and result in no change at all for seniors whose AGI now exceeds the threshold amount where no deduction is allowed. I'm not currently clear on whether there are any adjustments that add back non-taxable income like municipal bond interest, which I received to AGI when making this computation. My municipal bond interest is added back to my AGI to determine my Medicare premiums. Taxes on Social Security benefits are paid into the Social Security Trust Fund, and they have been an important funding source for those benefits. By reducing the tax payments on Social Security benefits, the time for automatic benefit cuts to Social Security benefits will be moved forward unless other funding sources are found to replace those tax funds. That date has been moving closer each year when the trustees make an estimate of when the Social Security fund will in fact become unable to pay 100% of benefits promised to its beneficiaries. The last estimate had 2033 as the bankrupt date, with Social Security tax contributions remaining unchanged. And that's no longer the case. They're going to be reduced. And even with those funds, there would have been a estimated automatic benefit cut in 2033, as I recall, of 19% of the benefits owed, so that the beneficiaries would be collecting only 81% of what was promised to them. The other benefit to me, as far as I can tell, is the extending the Section 199A 20% above the line deduction for taxable REIT dividends that saved me last year about $100 in taxes. I don't believe the extending that 20% deduction to BDC dividends sourced from a taxable interest income survived the final cut. That doesn't make that much difference to me one way or another. It's not important. I do not have any earned income since I am retired. Other above-the-line deductions will not help those who do not pay federal income taxes under current law. The benefit will be small for those who pay federal income taxes but are in low tax brackets, since the tax savings are structured as deductions. Overall, as I said, I estimate that I will save about $400 to $500 in taxes. Part of the Social Security deduction will be phased out for me since my AGI will exceed the threshold amount, which is why I have a range for tax savings that I'm currently estimating. The Institute for Taxation estimates that the top 1% will see a $1 trillion tax cut from this Republican-passed legislation, so they will have a lot more money to fund Republican campaigns in the future with misleading. They use misleading advertising. I mentioned above the line deduction. That is similar to that is what is now available under the 2024 law for taxable REIT dividends. You fill out a separate form. You put in the total amount of taxable REIT dividends you receive, and then you are able to deduct 20% of that. And then the 20% is then added to your standard deduction, so that's an above-the-line deduction. It is not an itemized deduction. So those have value to people who do not itemize, who would have otherwise have taxable income that they would owe.